Bitcoin isn't the answer to everything. It's a very, very strong store of value. It has a lot of, utility. It can be fractionalized. It can be used for payments and transfer of wealth. But it's not the answer to everything. And that's, I think, what a lot of people miss with crypto is that they fail to see that the way it's expanded and matured is that however you choose or want to interact with the ecosystem, you can. It's very free in that nature. It doesn't tell you that you must conform to this standard or you must use this service in order to access this product or service or whatever it might be. Whereas typically with the traditional system, if you don't do it their way, you don't have any other choice. I can't, the idea of self-custody and decentralized lending and things like that, through peers, it's all very new, very, different to what we know. And that's a big change for a lot of people that they're not comfortable with yet.
Welcome to the Exponential Investor Podcast. Want to be a better, smarter, more clued up investor? Well, you've come to the right place. We cover the breakthrough investment ideas you don't hear about in the mainstream to keep you on top of the megatrends and opportunities reshaping our world.
Good morning and welcome to another Exponential Investor Podcast. I'm your editor, Sam Volkering, here with my co-editor, Kit Winder. Kit, great to have you with me again this week. Now, last week we covered a couple of questions and issues around topics around the green energy market and electric cars and hybrid cars and what's going on there. You had a couple of questions for me, which we didn't get around to last week that, believe it or not, we have time to get through today. So what do you got for us? Fire away, and hopefully everyone listening will take a bit out of hopefully the answers that I can provide.
So I was reading up for the first time around Binance and Tether and Bitcoin and the connections between the three, having sort of been ill and away while the Binance thing was kicking off, and I guess almost wanting to start from the basics in terms of Tether being the sort of dollar-backed, almost like a gold-backed currency in fiat. It would be like a dollar-backed cryptocurrency, which forms the basis of most or of quite a number of Bitcoin transactions, as I understand it. And then the connection to Binance was something I didn't massively understand or hadn't heard before. And then Binance going under and all of the concerns around Tether, or the extent to which Tether is actually backed by real US dollars, or how exactly it's managing that. It just all seemed incredibly interesting to me. So I guess my first question is, how big of a risk is posed by the faltering of Binance and the potential for Tether to be a fraud to the actual price and development of Bitcoin?
Yeah, okay, so they're good questions, because a lot of people there's a lot of misinformation, there's a lot of incorrect information, there's a lot of speculation about Binance, about Tether, about a lot of things in the crypto markets, and it's important to understand what role they all play, the risks that they pose to the broader crypto ecosystem. So I think what's important to understand is that both Binance and Tether crypto Bitcoin existed before they ever did. And that's important for a couple of reasons, because for a start, if you look at something like Binance, so Binance is really one of the, if not the biggest global crypto exchange, where you can facilitate the buying and selling and trading and swapping of cryptocurrencies, whether it be through something like, you can use Tether, which is you say, Kit, a US dollar stablecoin. So the value of a Tether is essentially pegged to $1 US at all times, give or take very minor fluctuations around that. And so effectively you can trade Bitcoin for the Tether on Binance, or if you've got Tether on Binance, you can buy Bitcoin or sell it into Tether, as you can with a whole number of different cryptocurrencies. So what the stablecoin Tether does is it effectively provides a useful utility for trading in and out of fiat currency without having to deal with the traditional financial system, frictions that you get when you're trying to convert currencies across borders or transact and transfer them from one place to another. So stablecoins in that sense. Now, it's also important to know that Tether isn't the only stablecoin out there. There's at least a half dozen different ones. Some are backed by custodial holdings of the currency they're pegged to. So Circle, for instance, has a stablecoin called the USDC, which is again pegged to the US dollar and backed by US dollars. And Tether is believed to be backed by US dollars, but whether or not it is one for one, every Tether in circulation is backed by an equivalent US dollar is up for conjecture, because the audits, there's never been a full proper audit of that, which I'll get into in a minute. But stablecoins effectively now provide a very useful utility for dealing in fiat currency, like the US dollar or the euro, or other stablecoins that are denominated in fiat money. So that's really helpful for exchanges like Binance, right? Because it provides them with huge volumes for people that just want to buy and sell in and out of fiat money without, so day traders effectively. What it means is that for an exchange like Binance, it means they can also offer other products and services. So what they had been doing is they were starting to offer leveraged trading, where you could actually leverage trade the crypto markets, I think up to 100 times. It might have even been more, 100 times leverage on margin, which is, you know, an astronomical amount of leverage and risk. Subsequently, they've actually wound that back recently to, I think they cap it out now at 25 times, because they're trying to be a little bit more regulatory friendly with the products that they offer. Because you'll also note that Binance was banned, or Binance markets were banned in the UK by the Financial Conduct Authority, banned for offering regulated financial products and activity. So what that means is that they can't offer anything that's actually a regulated financial product in the UK, which actually really doesn't impact them that much, because they don't really offer regulated financial products in the UK, because crypto isn't a regulated product. So there's a lot of sort of fear about Binance being, like, people claim that it's a scam. The banks claim that it's a scam, actually. And so we've seen banks like HSBC, Barclays, I think Santander, and a number of others. I think NatWest maybe be another one, that have blocked customers from sending their pounds to Binance to buy cryptocurrency, because it flags as a scam to the banks. In all reality, you know, not much has really changed at Binance. In terms of the systemic risk that an exchange like Binance might pose, it's significant. If Binance failed and wasn't able to meet its obligations for the cryptocurrencies that were held by all the users on their accounts, I mean, we'd be talking about the modern day version of MtGox. And for people that don't know what that is, MtGox back in 2014 failed. It was the world's largest crypto exchange, predominantly Bitcoin. So it was the world's largest Bitcoin exchange, and it failed, went bankrupt, closed down overnight. If you had Bitcoin on MtGox, it disappeared. I think somewhere in the vicinity of 700,000 Bitcoin went missing. And to this day, you know, we still are trying to recover Bitcoin that was held on the MtGox exchange. That was massive at the time when it failed back in 2014. And it was big enough. So I think they handled something like almost close to 90% of all Bitcoin trades at one point. Don't quote me on that figure, but it was high. And so when MtGox failed, there was genuine fear that it may just completely crush the Bitcoin market. And it didn't. It didn't, because these exchanges on their own, while they get a lot of volume and they have a lot of customers and they do a lot of, you know, transactions on the different networks and blockchains and cryptocurrencies, inherently, if they fail, that's good for the market, Because, well, people, you shouldn't really store your crypto on an exchange anyway. So if an exchange was to fail and you had your crypto on there, it's kind of like, well, you've been warned that that's a risk. And so, you should factor in those risks, and you should always self-custody your crypto where you can. But that's the beauty of a free market like the cryptocurrency markets, right? Is that you can have these market failures and the market moves on, and bigger and better things come out of it. So out of MtGox, there were other exchanges. We ended up with Coinbase becoming a raging success. Obviously, more recently, Binance, and even more recent than that, the FTX exchange, and even like Gemini. So we've gone through a period. We went through a period where a lot of exchanges actually did fail. And out of that came better exchanges, better KYC, better custodial systems, better systems all around, more robustly backed and structured. And so if, we were to find that something like Binance was to fail, which I don't expect it will, to be honest, then that's how a free market operates. Now, should Tether make out to be, fractionally backed, I honestly don't think the market's going to care. Because there are some stablecoins out there that are algorithmically backed and aren't backed by physical US dollars at all, and no one seems to care, and they're major trading pairs. So Tether could be. I don't buy into this whole thing that Tether's a scam or anything like that. I mean, the idea that Tether could be a fraud. I think I kind of struggle with that as well. They've cleared any issues that they had with the US regulatory body there, the Securities and Exchange Commission. There just hasn't been a full audit of Tether in circulation. And even if there was, which they claim could be only months away, I think it's going to put a lot of this Tether fear to bed. And like I say, even if Tether didn't exist, the crypto market would be fine, because you've got so many other trading pairs for swaps. You could exchange Bitcoin for Ethereum. You could exchange it for Circle's stablecoin if you wanted to. There's a Euro stablecoin. So again, the market has become mature and sophisticated and big enough that it can actually wear large market failures should they arise at the moment. So, again, it's one of those things where you don't want those things to happen. It would create short-term opportunities probably in the market. But when you look at the bigger picture, the market ends up being better for wiping anything that's got issues like that clean from the market, I guess.
Very interesting. Now, some things in there, I was writing down notes, and I had quite a few questions, which we definitely won't have a chance to get through them, but a few things sort of stood out to me. Firstly, thinking about the core concept of Tether and what it does in terms of a stable coin, being actually something that attaches the crypto system to the fiat world that it's purportedly trying to escape. So there's an irony or an inconsistency there, which you also mentioned in the way that you said, if you hold your cryptocurrency on an exchange, you have been warned. This isn't, the point of Bitcoin was sort of to be an escape from the financial institutions like banks, an escape from the intermediaries. But it turns out that maybe the intermediaries are what people want. Is that something that concerns you? That the reason we have banks, because people didn't want to have to store their own money. They didn't want to have to worry about, a safe for their gold, or in cryptocurrency, where to hide their codes or how to be secretive about it. And that the reason why Coinbase and Binance and these things are popular is that people would rather the simplicity of an intermediary, and that the counterparty risk is actually an accepted price for people for that thing. So I guess the whole question is like, do Tether and Binance, even if they are legitimate, which I think I would probably take quite a different stand from you on how likely that is, even if they are legitimate, do they represent, are they worthwhile things for the crypto community? Are they what, the founder of Bitcoin and enthusiasts such as yourself, are they what you want?
So ultimately, they clearly are wanted because of the immense popularity and use of them, because of the simplicity of them. So they certainly, Binance in particular, certainly does function as a useful intermediary in terms of getting funds from fiat money into the crypto ecosystem. So I've used Binance before to buy Bitcoin and Ethereum with British pounds. So that is quite a handy, and because it's easy to do, so it's quite a handy way to on ramp into the crypto world using Binance. Tether, I genuinely couldn't give two hoots about. I don't hold Tether. I don't transact in Tether. I don't really see the point of it. I mean, I see the point of it in terms of, like I say, its utility for movement of US dollars, or at least, what's believed to be US dollars, from point to point, and to facilitate transactions and payments, things like that. I can see there being a strong utility there. And this is why, so like with USDC, the Circle stablecoin, this is why Visa's starting to use it as a settlement layer for their network, is because they can see that there is functional utility of stablecoins in a global payments and remittance and transfer market. So there's certainly use for it there. But for me, it's like you say, it's like the point of a stable coin is very much the antithesis of crypto, of Bitcoin. I mean, it is like the name Tether inherently tells you what it does. It tethers you to the US dollar, to the fiat money system. It's not breaking any shackles. It's just making them tighter. But that's because there's a lot of people that just want to trade crypto in and out for profit on in fiat money, which I completely get. But there's also a lot of people that want to self-custody, that want to hold Bitcoin long-term, that see that as being a future global, basically a standard currency, global reserve currency of the future. And that's certainly what I believe, and I know a lot of others do. I think the thing with crypto is that it can offer the best of both worlds. Is that there are intermediaries like you say, like Coinbase, like Binance, that provide that layer of simplicity for a lot of people that maybe just want to get crypto, maybe want to see some trading opportunities and realize some fiat money profits. But they also facilitate on-ramps, and they allow you to self-custody. So they allow you to send your crypto to your own wallets for safekeeping and storage. And Binance, to their credit, has developed their own network that allows for decentralized exchanges, where they effectively have cut themselves out of the transaction, and they allow for people to become market makers and liquidity providers in those trading. So there will be these Coinbase and Binance. There will be these intermediaries that you can custody with and you can hold your crypto with. There is still absolutely an element of counterparty risk with that. And there will be people that need that, want that, and don't want to worry about anything else. But there's also plenty of others that will use decentralized exchanges. They will use different kinds of on-ramps, and they will self-custody. So I think it's important to know that there's never, there is no one solution to everything. It's like Bitcoin. Bitcoin isn't the answer to everything. It's a very, very strong store of value. It has a lot of utility. It can be fractionalized. It can be used for payments and transfer of wealth, but it's not the answer to everything. And that's, I think, what a lot of people miss with crypto, is that they fail to see that the way it's expanded and matured is that however you choose or want to interact with the ecosystem, you can. It's very free in that nature. It doesn't tell you that you must conform to this standard or you must use this service in order to access this product or service or whatever it might be. Whereas typically with the traditional system, if you don't do it their way, you don't have any other choice. I can't, the idea of self-custody and decentralized lending and things like that, through peers, it's all very new, very, different to what we know. And that's a big change for a lot of people that they're not comfortable with yet. So we're in a bit of a transition period with it all. And I think we'll end up with, like I say, a broadening ecosystem that allows just people to have the freedom to do what they want. And that is really kind of the core principle of what cryptocurrency is supposed to be.
It's interesting. I mean, a lot of the things you described sort of sounds like systems that would have existed before the onset of technology. And then a cash-based, less centralized, as you say, decentralized system where village by village, there would be, one local lender perhaps, and you'd lend to the farmer, or however it would work. But it's sort of rather antiquated. And I suppose I just keep thinking that we developed the solutions that we have for that, the intermediaries, for a reason, and people were willing to take on that risk. But the question I actually had for you, Sam, was just going back to the futures and derivatives and leverage that you mentioned Binance were offering, and you said that they'd scaled that back, and that was one of the headlines that I saw in the last 2 weeks, was that they'd stopped offering certain futures and derivatives on crypto markets.
Yeah.
How big had that market grown? So let's say futures, especially on Bitcoin, how big had that market grown, and how big of an impact does that, what's the sort of mechanics of how that impacts the Bitcoin price day to day, and how big was that impact, if you see what I mean? So what's at risk from them stopping that?
Not much really, because there's a lot of regulated operations that offer futures contracts and options trading on crypto in other markets. There's big futures market for Backed, which is the ICE owned, the Intercontinental Exchange group owns the New York Stock Exchange and has a stake in Backed. They have futures, so the futures market wasn't really impacted at all. Again, Binance not offering that stuff is more just a risk to their own business rather than anything broader than that. Same with the leverage. I heard the founder and CEO of Binance, CZ, talking about the people that actually used that massive 100 or 125 times leverage or whatever they were offering. And he said they were, the people that were using it were doing just like these tiny little micro transactions built on top of each other. And that most people didn't actually ever use those really high leverage numbers. So it's not really a huge impact to them scaling that back at all. If they were to stop leverage trading tomorrow, it wouldn't shake the crypto market that much. I wouldn't expect. Likewise, if they completely shut off any futures and options trading and things like that, again, it all comes back to those that are just wanting to trade and make a profit on these things in fiat money. When there is still a big chunk of the market that just wants to continue to build a base in Bitcoin, and in that sense, the price almost becomes somewhat irrelevant, and they're more trading crypto to crypto than necessarily, and just sort of using stablecoins as a leap pad from one to the other, rather than taking it into US dollars and then exiting back into the fiat system by converting those back to the central bank issued money. So in short, I don't think it's an issue.
Okay. Well, at risk of sort of turning this into a 1 hour session, I'll leave it there, but it's definitely something that I'm going to look into. So if you were to go onto exponentialinvestor.com next week, I think I'm going to try and write something about this, try and dig myself into the questions around Tether and Binance and see if there's anything I can find out, and maybe bring back a slightly stronger challenge for you, Sam.
Yeah, I mean, look, absolutely. And I'd probably finish up with, like I said at the start, I mean, you've asked yourself the question, if Tether didn't exist, would the crypto markets continue on? Or if Binance didn't exist, what would happen to the crypto markets? And while there may be short-term volatility in that, the slack gets picked up everywhere else. Like I say, Tether's not the only stable coin. There's at least, almost a dozen others. Binance isn't the only exchange. There's, tens of dozens others like it. Like I say, FTX, for example, is a newer one to the market, and they're growing at a pace that is obscene, really. They just did a $900 million venture capital raise, giving them something like a $18 billion valuation. Not bad for an exchange that was started in 2019. So the speed at which the market moves, it very quickly adapts to any sort of significant issues that you might face. with those sorts of things. But like you say, we could go on about this for a very extended period of time. We've already gone on for about 20 odd minutes with it, which is more than enough for a Friday morning. So hopefully you've enjoyed our little discussion, or really mainly my discussion from Kit's questions. And we will be back with you again next Friday with another Exponential Investor podcast. So thanks for listening, and bye for now.